Is there any way how to measure fear in the market? Yes, there is. And the way is called VIX. My name is Jacob from FINEIGHT and let's start. We don't have time for waiting. If you look at the upper chart, there is VIX. It measures the volatility, the fear that appears in the market. If the price of the VIX increases, it means that everybody is afraid of falling market. Everybody expects that the market will go down. If you see that it's going down, the VIX market, it means that market can go higher because nobody is afraid of some drop, of some short in the SPI market. So how you can use this feature in your trading style? The best way is to look at extremes. I've synchronized crosshair of VIX market here and the SPI market, and let's look at some extremes. Look what happened here. We saw some extreme on the VIX market and we found the bottom at the SPI market. If you look at, for example, here, minor extreme, if you compare these two highs, again, what we found? We found the bottom. Okay, again, what we found here? Never mind, market went down. That was a losing trade. But look, for example, here, we found another new high here and market really stopped. And then VIX was declining, was going lower, and market could go higher. So in this case, if you look at the VIX, now we went almost to 80. And now we see that we are going down in the VIX market. And what's happening with the SPI market? Okay, look, we are going higher. We are going higher here. We had a trend line here. Okay, look, we saw that market closed below the trend line, went above the trend line and tried to break it again. But what was happening? VIX was going down. So there was no fear again. Nobody was expecting market go lower. So in that case, it was much better to enter long trade from trend line because we saw that it was support and we saw some extreme, that market was falling down from some extreme level. Okay, look for example here, we saw some retracement here, some pullback from 332 and 320. So I guess 12 points. And look what was here. We found extreme of almost from October to January. Okay, this range. We found extreme. And what happened? Market went higher. Yes, in this case it was really terrible. It was coronavirus crisis. But many traders will tweet or create some tweets like we'll go lower because we broke the trend line, and I talked about it in the previous videos. But everything shows in the market that some retracement, that it was possible to see some retracement because of the trend line, because of VIX. Yes, I expect that. Now we will try to push market down here. Okay, again, some 50% retracement of this, for example. But from this support, from this trend line, it's very good rally. Again, if you want to measure fear and you want to find bottom, it's very good to use. It's very good to use VIX, because again, if you try to find some extremes, you will always find bottom in the market, or in most cases. And that's very good because you have bigger probability of a winning trade. So that's the reason why I thought here that the market will go higher. And I have mentioned that in the previous videos. And the reason was simple, because I took some points. I took also some puzzles and connected them, and that's trading. So use VIX in the SPI market. Yes, There are not many signals, okay? Look, there is extreme, there is another extreme from May to August. So only 2 trades in a year, for example. But never mind, because it's only for SPI market and you are waiting for the best shot. So if you want or try to find a bottom, it's a very good tool to use VIX. Thank you for your attention and I wish you good trades, guys. Bye.